This week I made some trades worth $900. I just want to show you how it happened, why it happened, and how I'm going to solve it. So it's currently 6:32 in my country, 33 in my country, and this is currently just GBP USD on the 4-hour time frame. So actually this video will help you learn on how to trade with supply and demand, market structure, and top down analysis. Okay, so this is a chart of GBP USD. As you can see down here, GBP USD in the 4-hour time frame. As you know, I always use supply and demand, market structure, and top down analysis. So market broke structure here. This is a breakout structure. Okay, then it had left a demand zone down here. As we always know, supply is selling and demand is buying. Okay, so on it leaving this demand zone, I had to wait for the market to come down here so that I can buy, and our week began from here. That was a Monday. Okay, so the market began, the week began in the supply, in this demand zone. Okay, and my target was to take profit here, since this was the last higher high. Okay, so as I waited for the market to drop here, I always wait for the market to come into my demand zone, then I go into the 15-minute. But before I always go into the 1 hour, to refine my demand zones, or my point of interests. Okay, since my point of interests are already supply zones and demand zones. So in going to the 1 hour, you can see this is the order block here. That's what we call refining. So this is the order block, but this is the last higher low. Okay, so I mark my order block and take it up to the last higher low. Then after, I go to the 30-minute to refine the same point of interest. So as we can see, in the 30-minute, there is no order block. Okay, so we just remain with the 4-hour, the 1 hour and 4-hour supply, the demand zone. Okay, so if I'm to go to, so when market came into my point of interest, there I always go into my 15-minute to get an entry. So if I'm to go to my 15-minute, so when market comes into my demand zone, I always take my entries of fair value gaps. So after it coming into my demand zone, it came here and made a fair value gap. So as you can see, this fair value gap here, it came and made this fair value gap, showing that now it's ready to move up. Okay, and it actually didn't retest it, so I was left out on this trade, but it came back. So it came back before it actually broke this 4-hour last high. It never broke it with a candle in the 4 hour. As you can see, this is the move here. It actually came back, it gave me this entry, but it came and never broke the high, so I was good to go to re-enter in case of it came back in that real zone. So I came back. So when it came back, this was the move where it came back from. Okay, Okay, so when it came back, it gave me this fair value gap. Okay, it gave me this fair value gap here, and it retested it. The fair value gap you can see here. Okay, the fair value gap you can see here, it gave me this fair value gap, so I had to enter on this trade from here, and then put my stop loss right the way down the tip. I always add in to make it at least a good number, like far away from the stop loss. Okay, so it was at 25. Okay, and at 25 I had to take my take profit right away to my last high. So I always take a 1 to 3. So on this trade it was a stop loss of 20, and I took my take profit to the last high, and it was 60, which was a 1 to 3. And I always risk my account 5%, 5 to 7%. That's how I risk my trade. I don't take trades with a 1%. That's always just a risk management for prop firms. Okay, I always, whenever I'm trading a prop firm, that's when I risk 1% to 0.5%. But when I'm trading a live account, I always trade risking 5%. Okay, so after the market giving me this profit, it as well never broke. Okay, it as well never broke the 4-hour time frame, but since it had already swept this valid demand zone, let's go to the 4-hour. I'll show you. So the market it never broke with a candle above this level. As you can see, they are all wicks. This candle is in this candle, this candle is in this wick, so it's not, I don't consider it a candle break. So they are all wick breaks, and since it had already swept this valid demand zone. Why is this a valid demand zone? Because this demand zone caused a break of structure here. Okay, so it caused a break of structure. This could be a valid demand zone, this one here, but it never caused any break of structure, so I can't take it as a valid demand zone. I would have taken an entry here to sell this market, bringing it down to this demand zone, but it's not valid, so that's why I just left it. Okay, so that's the first entry. I'm going into another entry. So on this entry I would have taken 15% of my account. If it's a $2,000 account, I would have got 15% of that account. Okay, so that's one of the trades that I missed on GBP USD last week, and I never took it. So actually I took also a trade on GBP Chef, but I'll show that maybe next time. But if you're always interested to see my trades live, trading them every day, like I always give you updates on my trades, I always give you updates on every step I take, you can go down in the description. I'm going to open a TikTok account where I'll always be where I will show you all my trades daily, the befores, the afters, the losses. I'll always check the losses as you see, the profits as you see, and I'll deposit a $2,000 account for you to monitor my trades. And in case of you get interested to learn from me, or if you gain trust by that account or by those trades, then you'll be able to learn from me or take advantage of that.